Let's get to hot picks. We're focusing on tech giants. Now, Tesla has reportedly begun to tell robo-taxi app users in the California Bay Area about an upcoming launch of its robotic taxis. And Tesla is a top pick for our guest. We're joined by Alonso Munoz, Chief Investment Officer at Hamilton Capital Partners. Alonso, thank you very much indeed for joining us.
Andrew, good morning.
Tell us why you like the look of Tesla.
Well, yeah, Tesla's been on a wild roller coaster ride this year. It's been obviously a polarizing stock, if you will. The CEO, Elon Musk, has come back to the company. We heard from him and the leadership team in the earnings call last week. And Andrew, it was a bit of a somber earnings call. I think they talked a little bit about the challenges that Tesla's going to have over the coming quarters as it relates to the regulatory credits and the headwinds in the EV market. But this is still a great overall AI play. We don't necessarily see this as a car company, but more of a technology company. They have a wide ecosystem. This is just a robust company. We're watching to see how this robo-taxi rollout goes, not only in Austin, but also in other cities like, as you mentioned, in San Francisco, as well as their Optimus robot development, new full self-driving features in their vehicles, as well as potentially a lower cost vehicle coming to market. So interesting company, broad ecosystem, a lot to talk about with Tesla, but certainly a volatile and roller coaster like stock.
One of the concerns has been Elon Musk dabbling in politics has alienated some car buyers, especially in Europe. Is that not going to be a headwind?
Well, definitely. I mean, there was a lot of brand damage that was done, I think, over the last couple of quarters. But ultimately, when we refocus as investors back to some of the core competencies that Tesla has, which is AI, development of really incredible vehicles, full self-driving, robotics, and also their energy storage business, which has continued to grow, and it should drive a lot of earnings for their 2025 fiscal year. But it's something, obviously, Andrew, that has been front line over the last couple of months. It's not something that we've ignored, but ultimately we're glad to have Elon back at the helm of his companies. We think that he's refocused, and that should continue to drive that vision. A lot of investors really believe that Elon is a driving force for the vision at Tesla specifically, so we're glad to see him back in the cockpit.
Google. Tell us what encourages you to buy Google stock these days. Partly their huge investment in artificial intelligence.
Well, a lot of things. You know, Google has lagged a little bit compared to some of the Mag 7 peers, and not necessarily cheap, but it's traded at a lower valuation. And similar to Tesla, Google has a really broad ecosystem that they can lean on for revenue, but also for growth. Last week on the earnings call, we heard really positive forward guidance. They increased their capital expenditures to $85 billion. And Andrew, they basically beat on all the metrics. I mean, Google is really firing on all cylinders. We saw double-digit growth in their cloud business, in their search business. YouTube has become very, very popular as a streaming service and one of the most used or widely used across the globe. So Google right now is in a really strong position to maybe catch up a little bit from that valuation standpoint and also take advantage of this AI hype, AI revolution that we seem to be in, and it's continuing to power markets higher.
And you do like the robo-taxi potential of Tesla, but also Waymo, Google's self-driving investment. Do you think that holds promise?
We do. If we look back a couple of years, investors didn't really like Waymo as a vertical within Google's ecosystem, but it's really expanded. And what we're seeing is a rollout across multiple cities. Waymo has a lot of cars deployed out on the streets, driving autonomously, very different from Tesla that has a very concentrated, very small rollout so far of their robo-taxi service. So we think that this continues to drive revenue for Google. Waymo's obviously interesting. It's going to have to compete with robo-taxi at Tesla and very different services. Tesla uses obviously cameras. Google's Waymo is using LiDAR for their vehicle sensors and such. So we're going to watch and see how this plays out, but it's still an interesting piece. We think it's going to drive a lot of revenue, and autonomous driving is interesting for us. So we think this is a core part of Google's business going forward.
And finally, Broadcom, the maker of specialty chips. What attracts you there?
Well, this is a company that's similar to NVIDIA. It's powering all of this, these AI conversations, this AI enthusiasm, this AI momentum that we have in the marketplace. Broadcom makes obviously custom silicon chips. And what we're seeing, Andrew, is increases in CapEx across the board. at these hyperscalers, and that should be really, really positive for Broadcom. Broadcom has diversified revenue. They had their acquisition of VMware a couple of years ago, and we're starting to see that really materialize for them. They've had really good earnings and revenue over the last couple of quarters, and we expect to see the same as they report at the end of next month.
It's interesting with the stock trading near record highs. What could go wrong here? Presumably rival devices from other companies could eat into their franchise.
Well, certainly. I mean, we still have a lot of unanswered questions when it comes to tariff policy, when it comes to geopolitical conflicts that continue to impact these markets. And when we look at sectors specifically like technology and subsectors like semiconductors, these are high beta positions that really take off when the market's good, but they also come back to earth when the market momentum changes. So that would be one of the major risks to the market. When we look at their business and the ecosystem, obviously negotiations and trade restrictions with places like China, selling chips to other countries is something that we're looking out for as a major risk. But when we look at the industry as a whole, at the macro environment and the money that's chasing this AI trade, real money from these hyperscalers to develop data centers, develop their larger language models, Broadcom's in a really good position. They have a really good offering that competes with companies like NVIDIA, and that should be supportive as we look out into the next couple of quarters.